Real estate investing. Sounds like the golden ticket to financial freedom, right? But wait, is it really that simple? Investing in real estate has made people millionaires, but it has also led many to financial disaster. So, should you invest in real estate? Let's break down the advantages and disadvantages. And by the end of this video, you'll know whether real estate is the right investment for you. Stay till the end, because I'll also share some pro tips that most investors don't talk about. Let's dive in. Section 1. Advantages of investing in real estate. 1. Passive income and cash flow. One of the biggest advantages of real estate investing? Passive income. Imagine getting paid every month without having to work a 9 to 5. Rental properties can provide consistent cash flow as tenants pay rent, covering your mortgage and leaving you with profit. But here's a key question. Have you ever thought about how much rental income you'd need to replace your job? Let me know in the comments. 2. Appreciation and wealth building. Real estate tends to increase in value over time. That means if you buy a property today, chances are it will be worth more in 10, 20, or 30 years. Many millionaires have built their wealth just by holding on to properties long term. But here's something to think about. What if the market crashes? Would you still hold on to your property, or would you sell? Drop your answer in the comments. 3. Tax benefits and leverage. Did you know real estate investing comes with serious tax benefits? You can deduct mortgage interest, property taxes, and even depreciation. Plus, you can use leverage, meaning you don't need to pay the full price up front. With a mortgage, you can control a $300,000 property with just $60,000 down. Here's a question. If you had $60,000, would you invest it all in one property or spread it across multiple investments? Tell me in the comments. Section 2. Disadvantages of investing in real estate. 1. High upfront costs and debt risk. Real estate isn't cheap. The down payment, closing costs, and repairs can add up fast. And let's not forget, taking on too much debt can be risky. If your tenants stop paying, can you still cover the mortgage? Here's something to think about. Would you rather invest in one expensive property or buy multiple cheaper ones to reduce risk? Drop your thoughts below. 2. Market fluctuations and liquidity issues. Unlike stocks, you can't just sell real estate instantly. If the market crashes, you might be stuck with a property worth less than what you paid. That's why it's important to invest wisely and have an exit strategy. Question for you. If you had to sell a property in a down market, what would be your strategy? Let's discuss in the comments. So, is real estate investing worth it? Well, it depends on your goals, risk tolerance, and financial situation. If you learned something new today, hit that like button. And if you want more insights on investing, personal finance, and wealth building, make sure to subscribe and turn on notifications. Let me know in the comments. Are you planning to invest in real estate, or are you still on the fence? See you in the next video.